And welcome back to this weekly market recap where we go over this week's market. We'll keep it as simple as possible. Now, to tell the story for this week, we have to go back to last week's market. And to start the year, the market was looking like it was about to take off. If you look at the chart above, you'll see that we had a huge surge and it brought so much excitement in the market that we were going to retest those levels that we rejected mid-December. Now, going into this week after last week's market boost, everybody was excited. And if you look at the chart above, you'll see that on Monday, the market was at a high for the week. And all the retail investors were so excited that maybe we will retest those levels. And then it looks like the big dog, the institutions, they sold big time this week and it crushed the retail crowd. Monday to Wednesday, we had a very big sell-off, and that's when I had to make an emergency 2-minute market. And then Thursday was the president's funeral, so all markets were closed. And then we reopened on Friday. Now, Friday was a really bloody day in the market. If you look at it, we had a huge drop off and then we went sideways. So again, that is a bear flag. So when you go straight down and to the right, that's a sign that we have more action going down coming into this week. One of the big reasons for the sell-off this week was the jobs report. Now, Wednesday, we received the initial jobless claims. And again, initial jobless claims are how many people filed for unemployment. And if you look at it, the expectation was 215,000 people were to file unemployment, but actually came in at 201. So it showed that the job market was really strong. But the big one was Friday. Friday showed how many jobs were added in the U.S. market. And the expectation was about 155,000 jobs added. And it actually came in super hot, about 250,000 jobs added. Now, you would think that's a good thing, that more jobs is very important, but actually that's a bad thing. With more jobs, they're showing that we might not bring interest rates down. And with strong jobs data, it shows that interest rates might not be coming down. And actually, if you look at this chart above, you'll see this shows next Fed meetings. And this is when the Fed was supposed to cut interest rates. And this chart right here is predicting that we might not receive interest rates to the second half of the year. And that's not a good sign at all for assets. Now, the big thing with rate cuts and interest rate coming down are jobs and inflation. So next week, we're going to have some huge inflation data. So we'll see the second part to the equation of are we going to get rate cuts soon or not? Now, if we look at how the week closed with the indices above, you'll see that after those big job numbers, the markets were down across the board about 1.5%. Again, all markets finished very bloody. And some of the stocks this week that took the biggest falls were the AI chip sector. If you look at the chart above, you'll see NVIDIA and AMD had horrible weeks this week in the market. And those two big AI chip sectors actually leads me to my picks for Q1 stock buys. So the first one, again, Wolf. If you look at the Wolf charts this week, Wolf took a huge drawback this week with those AI chip sectors down. But now under $5 per share was that point that I was thinking about buying Wolf. So again, this week should be a very nice week to buy this stock to get a nice rebound. Now, the second stock on that list is TLT. Now, TLT, if you look at the year to date, has as well been coming down. Just like Wolf, TLT under $85 per share is a great buy going into Q2. Always remember, you buy low, sell high. What we're looking for with TLT again is that 10-year yield. If you look at the chart above, you'll see the 10-year yield is getting close to that 5%. So at that 5%, that's going to be the time to buy that TLT going long. So again, I'm going to be looking for that Monday to see if we have some great entries for Wolf and TLT. So 2 out of the 3 were doing bad. One actually shined, and that's WBA. If you look at WBA chart, WBA took off Friday and it is up above 25% per share. Now, 25% share is a huge gain. And what I do want to let you know about all these 3 plays is at 50%, you probably should take them off the board. Or what you can do is you can put a stop loss, which means is if it goes under the 50%, it instantly sells. So that's important because you can keep it running the end of March, which is the end of Q1. Or again, if it goes in that 50%, you sell and you made 50%. And just to give you some perspective, 50% is a huge gain in 3 months. Usually people only make 7% in 1 year in the stock market. That's very good for them. Now, going into cryptocurrency, we received huge news this week, and every Bitcoiner needs to pay attention to this. Back in 2020, the federal government seized 69,000 Bitcoin in this event called Silk Road. Now, the big news this week is the government did get the green light for them to sell those 69,000 Bitcoin. And that Bitcoin today is actually worth about $6.5 billion. And the reason why that was so interesting is because when President Trump ran for office this term, he specifically said he's going to make a rule that the government sells no Bitcoin. They're going to use that for their reserve. So this is a huge event that we need to see exactly how it plays off. If you look at the chart above for this week, Bitcoin actually did take a dive too with the stock market. You'll see that the low this week was right under that level I've been telling you guys for so long of that $92,000. And then what happened? We bounced back up. So I've been saying that leading into the inauguration on the 20th. So again, we need to see that support level, 92,000, and then we have to look at the top, the resistance, about $108,000 per Bitcoin. Now looking at this weekly Ethereum chart, Ethereum is still getting crushed as well as Bitcoin. So it just shows that right now, everything is following Bitcoin trajectory. If Bitcoin is going down, the altcoins is going down as well. Now going into next week, again, the main story is inflation. So Tuesday and Wednesday, we're going to get the CPI data and the PPI data. Again, CPI is for consumers inflation gauge and PPI is for businesses inflation gauge. And as well, it's going to be earnings seasons. Now the bank's earnings is so important because it lets us know about the consumers. And again, in America, we're a consumer-based country. So if the consumers are doing bad, the economy is doing bad. So again, they should have data as far as bank accounts and as well as people are defaulting on loans or not. So with inflation and earnings, we need to see if the market can bounce back up, because right now we're at a key level in the S&P 500 that if we keep going down, we can take a major dip in the market. But again, that following week is the inauguration when President Trump will be elected. So it's a lot of stuff going on in the market. Again, I just wanted to let you guys know everything I'm looking at. But again, this is the weekly market recap. I'll see you next week. Peace.